Well, everybody, I'm Cantonese Cat. Hey, everybody, Cantonese Cat here. Haven't done a public video here for quite some time. Just want to talk about this recession fears that's been going out there. And I'm going to look at this by, I'm going to spend a little bit more time looking at the NASDAQ, see whether or not we can extrapolate some data in terms of whether or not we are about to head to a stock market crash. What does a stock market crash look like? And how would you know if a stock market is crashing based on looking at a couple of things? First of all, this is the NDX chart, which is the NASDAQ 100 index. And what I have here is the weekly chart. And I have here, this is an indicator by a chartist called Lux Algo. And this is called the Super Ichi cloud. It's basically an Ichimoku cloud with incorporation of the super trend. And it's going to give you a little bit more of a smoother kind of cloud here to allow you to really better visualize the cloud as resistance and support. First of all, before I even talk about the current situation, I want to illustrate to you in terms of how beautiful this Super Ichi cloud is in terms of calling out any potential recession or potential market crash. We have just experienced a very vicious market crash here in 2022. And what happened is you have the NASDAQ, the NDX crashed all the way into the weekly Super Ichi cloud, right? Initially, you had a pretty weak bounce from the Super Ichi. You can see how it kind of touched upon the Super Ichi cloud here almost perfectly, right? And you had a breakdown underneath it because you didn't actually bounce that hard. You have a breakdown underneath the Super Ichi cloud here on the weekly. Had a bearish back test here at the horizontal zone and also at the top of the Super Ichi cloud. Was not able to break through, form a lower high, and the rest is history. Just crash all the way back down, right? Lower high, lower low, lower high, lower low, until it reverses trend. And the first resistance that it really had was the bottom of the Super Ichi cloud here on the weekly, right? And whenever you end up pushing through and kind of back test the Super Ichi cloud, that's when things started rolling back up, right? But this is usually basically signifying you have a breakdown and a bearish back test. That's when you have a big crash coming, right? I'm going to illustrate another example here, which is all the way back to the great financial crisis, right? Because everybody wants to look at the stock market crash. Every single time we look at, oh, it's down 10%, it could go down another 40%, 50%. Let's look at what happened here on the great financial crisis, right? Very similar thing happened. You have a breakdown underneath the weekly Super Ichi cloud. You have bearish backtest number one, was not able to push through, right? I'm not making this up, right? Another bearish backtest number two was not able to break through. And then that's when you start plummeting down, right? You can see a lot of extreme weakness over here before this happens. And whenever you end up pushing through here again, it's spent about 3 weeks here trying to push through the Super Ichi cloud over here. And it also did a back test here after it broke through. And then that's when you're able to go a lot higher, right? But again, the theme here is break down, bearish back test, fail to hold, then you go down a lot more. Let's look at the Dotcom bubble, right? From 2000 all the way to 2022. What happened? Well, let's look at the beginning of the Dotcom bubble. It looks a little bit exhausted here. Look at big giant uptrend here. Completely exhausted. Came here, back tested Super Ichi cloud. Had a little bit of a dead Cantonese bounce. That Cantonese cat bounce. And you were back testing this again. Was not able to break back above the Super Ichi cloud. Got stuck here in the cloud. Essentially, this is a bearish backtest, and then you start plummeting all the way down, right? But you really do need a breakdown underneath the Super Ichi cloud, and also on top of that, this is a result of a very irrational parabolic bull trend and a breakdown underneath the Super Ichi cloud. You see how it tried to break down underneath the Super Ichi cloud here multiple times, right? Touched it here, touched it here, touched it here, touched it here, didn't break down. Eventually it broke down whenever it made a huge move up and things got really exhausted, come back tested, couldn't hold it, couldn't make another higher high, and then it plummeted down, right? And as it plummeted down, it tried to backtest the Super Ichi cloud here, resistance here couldn't break through. Eventually, it spent about half a year or so to try to eventually push through the Subiji cloud, and you kind of backtested a little bit, and that's when things were able to get going again, right? So this is the Subiji cloud here. Where are we at right now? Are we at a crash right now? Did we break down the Subiji cloud on the weekly? Let's zoom in and take a look at it. What happened here this past week? Well, it looks like we just touched the top of the Subiji cloud here, right? Which actually can be a normal bull market behavior, and as I was just showing you, it can touch the Subiji cloud over and over again on the way up during correction, right? It does that. Even the pre-Dotcom bubble, you can see it does it multiple times on the way up, right? So we just simply touched the top of the Subiji cloud, and there is a great fear for a recession, because every single time when you have a drawdown, it could put it at risk for having a breakdown and go down a lot further, right? Do we see an evidence of it breaking down right now? No, we do not. Do we see it breaking down and have a bearish backtest, and that confirms a very, very significant recession is going to come? No, we do not. Right now, we're just simply touching the top of the Ichimoku cloud here. This is Super Ichi cloud here, right? That's what we're seeing. Now, let's look at something else here, right? Let's look at the Dow Jones Industrial Average. The same thing is happening right now, where it kind of got really close to the Super Ichi cloud. Actually, matter of fact, it looked a little bit better than the NASDAQ here, right? When you look at Dow Jones, the week didn't touch the Super Ichi cloud here again, whereas the NDX or NASDAQ ended up doing that, right? Now, the NASDAQ also didn't really quite touch the Super Ichi cloud down here, but the Dow Jones touched it back in October 2023, right? Basically, these touching of the Super Ichi cloud is not necessarily bearish, because it simply just need to kind of backtest things whenever it ran for a long time, and these are still relatively expected behavior of the stock market, right? The same thing happened here during the 2022 issue, right? You have a breakdown into the cloud, trying to push through, unable to hold, and you break down, bearish backtest, plummeted down because they couldn't break through, right? You basically have the same thing happening over and over again. Now, the only thing that I can say, I'm going to go back here to an NDX here. The only thing I can say is, even if it breaks down, doesn't mean that it has to go down a lot and have a bad recession, right? That's also not necessarily the case. I show you the worst case scenario, sorry. The worst case scenario is really 2022, the Great Financial Crisis, and the Dotcom bubble. Are there examples where it breaks down underneath the Super Ichi cloud here on the weekly and it didn't become anything significant? The answer is yes. This is COVID, right? It broke down underneath the Super Ichi cloud. Next thing you know, it just have a V-shaped recovery because the Fed just started printing money like crazy, right? Here, this is the taper, well, not really. Yeah, this is like the taper tantrum kind of thing. I think this is also like the tariff scare. Basically, what happened is you have October 2018 all the way down to December 2018. You broke down underneath the Super Ichi cloud, right? But you're able to have a V-shaped recovery all the way back test, and it just ran from there. So even break down underneath the Super Ichi cloud doesn't necessarily mean that you have a bad recession, right? Here, another example, 2015, 2016. Break down underneath the Super Ichi here in 2015 doesn't matter because it actually ended up having just significant liquidity grab over here and end up just not closing underneath of the Super Ichi cloud over here in 2015, but in 2016 it did close a few weeks underneath of that. What did it end up happening? Just breakthrough back test, and then it just ran, right? So even if it breaks down underneath the Super Ichi cloud, it doesn't necessarily mean that something bad is going to happen. Same thing over here, right? Broke down for a few weeks, able to break back above, right? So we don't even really have a breakdown yet. So as far as I'm concerned, anybody who is saying that this is the beginning of like 2022 over again, or it's the beginning of a great financial crisis, or is the Dotcom bubble because we're in such a big bubble, is speculating, right? They are speculating because I'm not really seeing confirmation for that. And that I just really want to show you. Now, on top of all that, I can show you a few things too. You know about this Cathie Wood woman, right? She buys speculative stocks that are just like horrendous. They never go up, right? Well, it's been making like her major flagship fund, ARK Fund, ARKK, ever since December 2022, and at bottom it's been making higher highs and higher lows, right? And guess where price is at right now? We actually also backtest the Subichi Cloud, right? Which is expected because we simply went way too far, way too fast, and got rejected here at 0.5. Lock fib, right? Come back down, backtest the Subichi Cloud after breakout is not necessarily a bearish thing. This is something that is expected of a normal market. This is normal market behavior. This is channeling up, forming higher highs and higher lows, right? So even ARK Fund is not really telling us anything necessarily terrible that is happening quite just yet. One other thing I also want to bring out, which I think is pretty important, is that if the Chinese market is not that bearish looking, I'm going to look at Alibaba as the face of the Chinese stock market. If the Chinese stock market is not that bad and it's not that scary, in general, the US market actually does pretty well over time. And this is better illustrated if I just go ahead and pull up the S&P 500 here on top. This is a monthly chart, and the Hang Seng Index here at the bottom here, this is the monthly chart here too. They're all lined up, right? You can see that pretty much every single time when China pumps, the US pumps, right? Every single time when the US goes down, Chinese market also goes down, right? Every single time when the US market goes down, it also goes down. Every single time when the US market goes down, it also goes down. But in general, when the US market goes down, when the US market goes, when the Chinese market goes down, the US market can still go up, right? Here's an example: the Chinese market goes down, US market goes up. Here's another example: the Chinese market goes down, the US market goes up, right? On top of that, here around 2021 or so, China market has already started going down since February 2021, but the US market continued to go down for a whole year, right? I actually don't really see that many exceptions at all over the last however many years, like 20 years, that the Chinese market just keep going up and the US market just goes down. This is really the first time I'm seeing a little bit of weakness here in the US, and the Chinese market actually does pretty well. This is really the first time really seeing that. Is that something that is unusual or that is sustainable? Is there something dynamically, significantly a change between the US market and the Chinese market that makes this kind of weird phenomenon happen? Or is it just that there's going to be some Chinese liquidity is going to exit China, is going to go to the US market, and it just hasn't really happened yet, right? As far as I'm concerned, it's very unusual for the Chinese market to actually do well and the US market actually not do well. And I don't think there's any deniability, if you will, that the Chinese market is doing well because it's forming higher highs and higher lows and channeling up, right? Really, ever since like October 2022, it's been forming higher highs and higher lows, right? So I find that to be another potential reason to think that I don't think U.S. market is necessarily crashing per se. I think recession is probably not going to be very likely if Chinese government is pumping liquidity into the system. Looking at Alibaba, looking at Subichi Cloud here again on the weekly chart, you can see how it got rejected, pushed through, backtest, and then moon, right? The Chinese market is doing well. Alibaba is telling you that. Right? Another stock that I think is doing pretty well, which again, to me, I think is a pretty good recession indicator, if you will. Because this is really a stock that represents a company that is really very, very small business base. It's Shopify. It handles a lot of the payments and things like that and websites and stores and things like that for small businesses, right? If Shopify is looking pretty decent, I have a hard time really seeing recession. And it's looking pretty decent. The one way to look at it, it's way above the Subichi Cloud. I can even show you the monthly chart here. And instead of looking at Subichi, if I just show you the monthly Ichimoku, that would illustrate this a lot better. It flipped the Ichimoku Cloud from resistance here to support, right? Even if you don't use the Ichimoku Cloud, it's basically just, if you do a fib level, and this is a log fib, it's basically just flipping a previous resistance level over here with this wick into support over here, right? Big giant green candle over here. So far, all these candles over here are essentially being engulfed by this green candle over here, which favors further bullish continuation. Got rejected at 0.618 here. Completely expected behavior. Higher high and higher low is channeling up. Am I seeing any concerns here for any bearish divergence here on a monthly? No, I don't. overall, it's a very, very beautiful bull trend. Got a little bit too far away from the 10, come back test the 10 in here. Shopify is looking great. If Shopify is looking great, I have a hard time really seeing like a recession. Look at what happened last time. On top of that, I'm going to fill out the RSI here. Look at what happened last time. They knew that the trend was getting exhausted. They knew that things were looking tired, right? Because things were just going up here from July 2020 all the way to November 2021 on bearish divergence. This bull trend is tired. This multi-year bull trend here got tired, right? Because you see the bearish divergence that's happening. And I would argue 2022 was a recession because based on pretty much all the stock market metrics, things like that, it looks like a recession, smells like a recession. They just refuse to call it a recession, but that's okay. This is what a recession looks like, right? Going up, bearish divergence, exhaustion, plummeted all the way down, right? That's what it looks like. Are we having that kind of look right now? Do we have those kind of bearish diversions where this channeling up bull trend is looking exhausted? No, we don't, right? So I just don't buy that. Let's look at another stock that is very retail heavy. That is actually one of the stocks that garners a lot of attention, right? Is GME. Is supposed to be a little bit relative risk on stock, right? You see how during a bear market it just get rejected here by the Sobichi cloud here on the weekly over and over again until it pushes through here, and what it's been doing so right now since like May of 2024. It's been close to a year. It's just been going sideways and we're doing nothing on low volume, and it's just been bouncing off the Sobichi cloud here on top, right? It's on top of Sobichi cloud. It doesn't look bad. It's just consolidating on top of the cloud, right? So, I mean, it could break down, and next thing you know, it could be over. But if you also look at the monthly chart here, if I just get rid of the Sobichi cloud here, just do the 20-month moving average, it's been turning the 20-month moving average here also from, this is another way to look at it, right? It's been turning 20-month moving average here from resistance here to support like it did last cycle, right? Resistance here, resistance here, resistance here, and the support, right? So the entire thing is you have a trend change here, and the trend change is still looking bullish here, right? It looks like it wants to keep expanding bullish band and keep going up higher over time. And if GME doesn't look bad, it's just kind of puzzling to me in terms of recession narrative here. Another stock that actually looks pretty good is that I also own is Cloudflare. This is a very high valuation stock. If you worry about recession, this should be one of the first ones that should get hit like crazy. Instead, what did it do? It tried to push about the 0.786 fib here, got rejected as expected because it's a very important fib level, and it's basically back to 0.618. Why is this important? Because it was previous resistance over here, back tested support. This is expected bull market behavior, right? A stock like Cloudflare, which has extremely high valuation, are forming higher highs and higher lows, and flipping the previous fib level resistance here to fib level support here. It's doing what you expect the stock to do. That's not necessarily something that would get me think recession. It's not necessarily going to get me think that way, right? Look at industrials. Look at XLI here. And I'm going to pull up the Sobichi cloud here as well. What is it doing right now? It back tested down here. This is also another Dow Jones industrial kind of way to look at things, right? Back test the cloud over here, back test the cloud the second time, right? It hasn't broken down yet. It just hasn't broken down yet. So I don't really necessarily see any confirmation for like a bear market for the overall market quite just yet, right? It's very puzzling. Another way to look at this, and I'm gonna probably just do this one and I'll stop because I can keep going on all day. Finally, let's look at copper, and I'm going to end this video here. Copper is looking pretty good. Why does copper matter? Copper matters because it is a reflection of economy. They call copper Dr. Copper because if copper looks good, that generally signals that the economy looks pretty good. Is copper looking good? Yeah, it looks pretty good. It basically break through the Ichimoku cloud here, back tested it. It looks like it wants to run, right? So to me, I think economic activity is actually quite healthy, potentially, right? I just don't really necessarily see a lot of the recessionary fears. Okay, so let's say if your fear is not so much recession, but your fear of inflation or stagflation. Well, look at oil. What is oil doing? Oil is sucking. Oil has been sucking for a very, very long time. It's been forming lower highs and lower highs and lower highs, and it's been bouncy ball here. It looks like very much of a bearish descending triangle. And if you also put up the, not the Ichimoku, but put up the weekly Subishi cloud, what is it doing? It's getting rejected, 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 rejected. It looks like it wants to break through under this descending triangle. It's just so weak, right? Well, if oil is not looking strong, where's the inflation narrative coming from? There's another website too, which actually does a pretty good job in terms of tracking inflation. I think this is probably more accurate than looking at the CPI data. CPI lags significantly because they also include like housing data, and it just doesn't really make a whole lot of sense the way that they're calculating it. But you look at the true inflation data to look at the U.S. inflation number is less than 2%. And the trend is your friend. It's been plumbing all the way down. I can even zoom out. Inflation really doesn't look like a problem anymore. So I don't know what else to say about all the fears that are out there except for fear itself. And except for the fact that the NASDAQ has dropped. Let me see. I can do this. I can promise you I can do this. Except for the fact that NASDAQ has dropped about 14%. And everybody's super scared because the NASDAQ dropped 14%. That's where all the fear and scare and discomfort and gaslighting each other is coming from, because the NASDAQ has dropped 14%. Right on top of the weekly Subishi cloud. It hasn't broken down yet. I am not going to say that it's not going to break down, because when Monday rolls around, you could very well have a bad Monday. That could very well happen, right? But all I have to say is that the fear and the end of the world type narratives are not yet supported by the data that I generally look at. And I just looked at it. I back tested it with the great financial crisis, the Dotcom bubble in 2022 crisis here. And it's not happening, at least not happening yet. So take that with a grain of salt, because there's so much noise out there, so many people, so many cats have different opinion, but I just wanted to share mine. Take care, guys. Bye.